Hey everyone, welcome to another edition of the Buddy Study Group. I intended this to be a news bulletin today, but it's probably more like I don't even know what to call it. There is so much new news out there in long-term care, and even when I say new is defined as the last 4 to 5 months, that it's almost hard to keep it all together. So when it gets to that point, I think it's time to just get a giant group of professionals together and talk through the changes. Some you may be aware of, some we may have already covered on this study group. But I think with our shared experience, we can get a really good grip on all that's going on in the industry right now. Uh, this is about as much activity in this short of a time period as I've seen in a long time. And the interesting thing about it to me is that it spans basically all product types. I'm going to have at least one annuity update to share with you. I'm going to have a short-term care update to share with you. I'm going to have a traditional long-term care update to share with you. I'm going to have a hybrid life long-term care update to share with you. I mean, it's spanning our entire market, and it's almost like all of our insurance carriers just kind of got together and developed this secret plan to release the hounds all at once. So that's a super, super exciting thing for me, and I'm sure for all of us. So as we walk through these updates one by one, I'll kind of go from least recent to most recent. Let me know what your thoughts on this are from a market perspective, what your thoughts are from a product to product perspective. Let me know if you've dove into one product over another. I see that Chris has seen one of our new updates, seen a webinar, and has some thoughts. Love it. Keep them coming. Um, but yeah, let's just kind of share what we know now and kind of what we think and see what the narrative is like out there together. So I have a bunch of notes here. My notes look like a book right now. But what I'm going to start with, we got some good jokesters in the chat already too. Um, so what I'm going to start with is let's go with the Nationwide Care Matters annuity. So this is a new product. This is not a product update. But Nationwide did just release an annuity long-term care product in the past few months, in case you missed it. There's a lot of things to like about the product in general, but I'm just going to kind of go over some of the quick highlights and then maybe we can talk about it a little bit. So, monthly benefit, cash indemnity, annuity long-term care product. I'm going to summarize if I had to pick a carrier that I would most closely tether this product to and look and feel, it's probably Global Atlantic's 4Care. And the big reason I say that is just the way they do the underwriting and benefit structure of the 2 times or 3 times multiplier, depending on your underwriting results. But of course, it's a very different product. That's just what I would call the most similar. Um, long-term care charge is fully guaranteed. Long-term care benefits and account value paid on death. Simplified underwriting. Now, this to me was one of the biggest things about this product release because from what we are hearing, they are targeting approximately 95% approval on this product. Now, I don't have any data, and we won't have any empirical data for a while as to how many people end up with, say, a 2 times versus 3 times. But their target right now is a 95% approval rate, which is a lot. It's very, very ambitious in my eyes. And one of the big kind of sales ideas that comes from this, and probably one of the reasons Nationwide wanted to have an annuity product among many, is that it can accept most Care Matters 2 declines. If we have both products available in that state if we're targeting a 95% approval rate. They are still building out and trying to utilize an underwriting system similar to One America. If your client is declined for Care Matters, following up with an offer for Care Matters annuity. Uh, Separately identifiable premium was another thing that came up. That's something that's really going to apply to riders only, but we are dealing with the 7702B long-term care annuity, Pension Protection Act eligible, all of that good stuff. So the sales ideas you know from your favorite 7702B annuity products, still there with this product. Um, Issue ages is going to be a range of 40 to 80, and there's a little bit of clarification to that. So it depends on what sort of underwriting you end up with. Even though there's a 2 or 3 times multiplier for underwriting, there's 3 underwriting classes. Okay, so with preferred underwriting, the age range is 40 to 74. With standard underwriting, 40 to 74 as well. And with select underwriting, 75 to 80. Right now, unless anybody has received other updates. This product is currently unavailable in California, Connecticut, DC, Delaware, Indiana, Florida, Montana, North Dakota, New Jersey, New York, South Carolina, South Dakota. So I think that is 12 states, if I'm not mistaken. And some of those states are obviously tougher than others, but I expect several of those to come with time because we generally don't see, a lot of problems with filing in some of them. Minimum funding is $36,000 premium, maximum funding $400,000 in premium. They do have a 10-year surrender schedule that starts at 10% and hits zero by year 11. 3% interest crediting rate guaranteed for the life of the contract. Right now, we're dealing with a single premium only. Benefit durations are, again, going to depend on underwriting and 2 or 3 times multiplier. With standard underwriting, you're going to get 4 years of benefit, 24 months acceleration, 24 months in the extension of benefits, 6 years with preferred underwriting, which is broken down in 24 with acceleration, 48 with extension of benefits, 6 years with select underwriting, and that's 36 and 36 months. So with a 4 year benefit period, 3 times multiplier with the other two 6 year benefit periods, that's for 2 times multiplier underwriting. 100% international benefit, and everything that I am hearing from them is positive as far as restrictions on claims certification, cash indemnity benefit. Yet again, um, let's see what else I have. There is a 5% compound inflation protection rider that is available and paid for with a single hit when the policy is issued. And the price is going to be 8% of the premium based on your age at issue. One of the things we know and love from the Care Matters products has made its way to Care Matters annuity as well, that 90-day retroactive elimination period. So on the 91st day, Nationwide is going to pay back the first 3 months from that elimination period, which is, I think, something to smile about. Um, just another note on underwriting. Preferred is your best health class, best leverage with a 3 times multiplier. Standard and select are both at 2 times the multiplier, but select is going to really provide the lowest amount of long-term care benefit in total, and it's only for ages 75 to 80. 6 questions for underwriting. Okay. Very, very simplified process. That is also something that I think many enjoy about this. And what underwriting class you end up with is really going to depend on the amount of yes answers. It's very, very simple. 2 yes answers is going to be preferred rates. So 2 or less yes answers. 4 yes answers is going to get you standard. 5+ yes answers is a decline. Okay. Um, they do include prescription drug reports and diagnosis codes as part of underwriting. So you should be able to quote this right now through Nationwide site. It's also available on WinFlex, and you can also, in their portal, download their proprietary software. App Packet can be found on iPipeline eForms. You can, I believe, fill out the application with DocuSign, and lifeapps at nationwide.com is where you go to submit that. So I really like this product, or I like the looks of it so far. For any of you who have um, dove into any of the quoting, anybody out there have any thoughts on the Care Matters annuity? I think from a market perspective, from a high level perspective, in my mind, it's great to see carriers adding this to their portfolio, adding annuity products. I think we're going to continue to see more of it, but I do really like what I see, and a strong carrier with a strong underwriting team and strong products. Anybody have any thoughts before we move on to update number two? That one's a bit of old news. When I ran a comparison against EQ, EQ had more benefits. So you're saying Equitrust Bridge in this case, Chris? Gotcha. Okay. Okay. Interesting. Yeah, Diane, go ahead. Oh, you're on mute.
I've run a few different ages and a few different states, and you really have to look each time because sometimes the Care Matters annuity comes out better and sometimes the Equitrust comes out better. So it just depends. Female, male, 68, 67, big difference between those two ages. I don't know why, but then when we get up in the 70s, it seems like Equitrust is prettier.
Okay. Okay, that's super helpful. And again, it's not as if we're going to discover every single cell of this product, but things like that are really helpful. Your clients were in the 70s as well. Okay, so that's a little bit of a trend then when we get up into the 70s. Um, Nationwide right now may not look as competitive compared to Bridge, especially. So I'll be interested to see if Nationwide's aim is maybe to just move toward a younger audience in general. Um, I think, opening to really, I think the grab for market share here too is that minimum age of 40, right? That really helps you get to the lower end of the spectrum. So anyone 40 to 55, I don't know how many people will be out there looking for a long-term care annuity or will have an existing annuity to 1035, but you can't count that out, right? Just being able to access that and access that with pretty liberal underwriting for folks who have the assets to simply make a cash sink premium, for example. So thank you for the info on that. Next one, and um, I won't belabor this too much because we did just have a study group from Tim Go on Secure Care 4. But another, not necessarily new product, but new generation, I guess you could call it. I don't know what constitutes a new product generation versus brand new product, but they are transitioning fully to Secure Care 4. And some of the interesting changes I liked from that was number one, the addition of a 20 pay option. I think continuing to offer flexible premium options is a great thing, especially those premium modes that not many carriers are offering out there. And if you do enough cases or you listen to enough reports on people's cases, you really start to understand that there are very, very specific planning scenarios out there, and to have premium modes to meet them is always a good thing. You do enough cases, you will meet a client who has a specific need for a 20 pay at the end of the day. So I love that. And again, this continues to be a trend. And, um, we had Phyllis and Linda on the study group not too long ago, giving us a full rundown of international benefits by carrier, and several carriers have already made improvements or adjustments to their international benefits. So 100% of benefits internationally with, you know, still all of the, deep dive language being verified to this point, but 100% international benefits, which is a pretty big step up from a company who was already doing pretty well with offering international benefits. I would have considered them in the top three or four. Now it seems like everybody wants to be tied for the lead, offering 100% international benefits. So another great trend to continue to see. We just want to make sure at the end of the day that there aren't a ton of blockers or conditionals or things that may restrict people's access to being able to use their benefits internationally. The ease of use of those benefits will continue to be really, really important in my eyes. And it almost feels like I'm, repeating myself, but Secure Care 4 has also moved to the same elimination period payback as Nationwide has done with Care Matters 2 and their annuity product. So, um, these companies will borrow what they can from each other, right? I think, if you can't beat them, join them in a lot of these cases, which is why doing these roundups is so interesting to me. Um, but hey, if carriers are going to battle and copy each other for very client-centric benefits, like a retroactive elimination period payback, I'm all for it. I think this is a great addition. And at the end of the day, we know what the impact of a 90-day elimination period can have, even though it's a pretty standard benefit. So that elimination period payback is huge. Um, and then let's see what else I had. Oh, probably the most stunning thing for all of the updates I'm going to mention with this product, no pricing changes. I don't know if I can't remember a time where I've actually seen that. Lots of product improvements with no pricing change. When we had Tim on, he said, you know, actuarially, they liked where they were at with the product and where it was priced and felt like they could still add some benefits and stay competitive, and be a bit more of an attractive option with some of these updates. So that's pretty cool to see, and that's made the transition to the new product pretty darn seamless. So gotta love that as well. Let's see. When it comes to I don't know if there was anything else that I really missed in this case. 20 pay pairs nicely with the 15 pay. Let's see. I did have a note here. If the client passes away before utilizing long-term care benefits, the death benefit will always be at least equal to premiums paid. 100% international benefits we discussed. Still with the tax deductible EOB rider. Oh yeah, availability. So let's just go over this map real quick. I'll share this with you. So there are still a few states that are on Secure Care 3. Our Dakotas, our Montana, Indiana, South Carolina, Jersey, and I believe that's Delaware. Sorry, I wasn't a geography major. If that's your state, I don't mean to offend you. And it looks like we've got quite a bit of coverage for Secure Care 4 right out of the gate, which is really nice. That may be one of the advantages to not changing your pricing around. California, no changes there, still staying on Secure Care UL. No product in New York, nothing's changing there. So quite a lot of availability right out of the gate, which is something to really like there. So I think overall this is a really nice change for Securian. If they believe and it holds up that they can keep their pricing the same and add some of these client-centric benefits. I think that's a huge victory for them. Anybody, has anybody done any sort of initial scouting on Secure Care 4? You sent an email request for a quote and never heard back. Are you saying from Securian, Chris? That's interesting. I can get you in touch with somebody if you need. Okay. Um, I can make note of that and send you an email to get connected there. Um, and also their site, advisor.securian.com, right there, is where you can log in. And there is no appointment needed to have an account. So normally you have to wait to get appointed with the carrier to have a login. You do have to register a login, but you don't need to be appointed, last I knew. Winflex and I believe Ensight are also places where you can quote this, but I really like Securian's Illustrator. I like their illustrations, so I generally go straight through the website. Um, Anything else that I missed? One of the yeah, I don't think I have anything else right now to share on that. Um, but yeah, any comments before we move on to our next item? We've got plenty. I feel like I'm going to take up the whole time just announcing everything. Okay, we can move on. Let's see. Who is my next here? Let's go with, again, this is another really recent one in this case, but I think the Equitrust Bridge changes, they've kind of been alluded to as we're talking about them in the same breath as Care Matters Annuity, but Equitrust Bridge has had a lot of really nice changes as well. So the minimum issue age dropped from 55 to 50. Again, the addressable market is definitely growing for annuity carriers and kind of overall with Care Matters Annuity having a pretty low minimum age of 40 and Equitrust coming down from 55 to 50 is a great thing. And then their guaranteed benefit base roll up increased from 2 to 3% compound annually for 20 years. I thought that was a pretty favorable change as well. Um, they made some changes to wellness credits through the Never Stop Wellness program. Um, I don't know how many folks are really tapped into the wellness program, but previously, the Never Stop Wellness program calculated those credits on the net amount at risk, and now they're crediting based on the benefit base, which is essentially going to increase their value. So, any actions with that wellness program are essentially just going to go farther based on the, internal metric of calculation there. So that was one thing. Um, the coverage ratio leverage now applies to all premiums paid in the first 5 years rather than just the first year premiums. That might be the biggest change to me. Um, that's going to really open up cases for premiums paid in the first 5 years rather than just single premiums. I thought that was really interesting. So, a bit more leverage beyond just what you put in the first year. I thought that was a really good piece. I don't know if anybody's experimented with anything beyond just premium in the first year, but I thought that was really interesting. And Bridge continues to be a strong product. I am always continuing to keep watch for them to get to an A rating so they can be distributed a bit more widely and for folks who currently can't use them now with whatever referral partners they have that must work with A-rated carriers. I hope they can improve to be more widely distributed. And again, this is just increased competition, right? This is a refresh. It's not a brand new product, but um, to me, this signals again, the annuity market is getting really, really hot. We've got new entrants and we've got existing entrants that are, trying to shape up to make sure that they still remain very competitive. And of course, with Bridge, guaranteed issue underwriting is never to be overlooked. And the leverage is really, really good for clients who can, kind of get that best rate class in underwriting. So guaranteed issue is going to end you up with something, but there are many clients who end up with um, better rates and better coverage ratios. And based on age, you can get some really, really nice leverage in that case. And of course, from our friends who spoke up, can tend to look a little bit better in the 70s than some of the competition. So I like what I'm seeing from them. I always like, um, you know, carriers responding to the competition to become more competitive. So I like that a lot. Mark, I want to just get your thoughts here and just pause quickly, if I could. Just overall, high level, like I still have two more really large and very recent announcements to give on product changes, but what is your overall take on how much traffic we're seeing after a while of feeling like there wasn't a whole lot?
I definitely think and new products and refresh obviously brings more people to the table. That's what you mean. More agents, more clients are inquiring. So I think it's all helping our industry grow overall. I think things come in batches though, right? Just like when you have leads and you follow up and then you have a dry spell for a while, and then all of a sudden we call it flushing, right? And all of a sudden
Yeah.
everyone comes through at the same time. That's how I feel about the market right now is everyone like planned for this for the last few years, but now it's all coming through at the same time. So that's what I'm seeing. Were you asking anything different than that? But that's
No, just overall thoughts. I mean, clearly it's a positive thing. You're right. This does kind of seem to happen in bunches sometimes, but this feels like a crazy amount. Like I think in maybe it was 2023, we saw that hybrid carriers just woke up one day and said pricing decreases, right? Or major tweaks in products kind of overnight, and the instant response just shows that there's a competitiveness in the market in general, and competitiveness generally implies a willingness to win and get the business, right?
yeah.
So I like the appetite that I'm seeing at the end of the
Yeah,
day.
there's definitely a desire for growth and actually I think there's some stagnation sometimes happening, right? What we see on the individual side. I'm particularly excited about, a lot of these individual products are starting to come out with more true worksite options to them. So that's what we've heard. You haven't talked about NGL yet, I don't think,
Not yet.
but that's part of where I think they're going to be launching after this initial, kind of new product announcement is a worksite capable version of this new product. As I think we're also going to see with some of the other um, traditional carriers, as well as even there's some innovative hybrids that are trying to enter that worksite arena. So to me, it's going after the market where you're seeing growth, right? And I think
Yep.
that's really smart. And making your product capable for that market, obviously, you can't just retrofit. Oh, let's slap worksite, as a sticker onto this individual product. Doesn't work that way. You have to be very thoughtful that it's designed for that clientele.
Yeah, so I think that's a pretty natural segue to NGL. Of course, um, brand new product announcement of Honest LTC. And name aside, uh, they have provided us with some resources. It'll be out in 3 days, February 13th. Um, a heck of a lot of updates. And I'm just going to really quick lightning round give you all of the states. Actually, I can put it in the chat. But for those of you who are just listening along, um, before I put this in the chat here, Alaska, Alabama, Arkansas, Arizona, Georgia, Hawaii, Iowa, Idaho, Kansas, Kentucky, Louisiana, Maryland, Maine, Michigan, Minnesota, Missouri, Mississippi, North Carolina, Nebraska, New Hampshire, New Mexico. Nevada, Ohio, Oklahoma, Oregon, Pennsylvania, Tennessee, Texas, Utah, Vermont, Washington, Wisconsin, West Virginia, and Wyoming. It's really hard when you're just looking at the two state abbreviations and trying to translate it in your head that fast. But those are all of our available states, and you can refer to it in the chat if you're here. So coming February 13th, they're also going to have two webinars around the product. So tomorrow at 1 p.m. Eastern, and then the 12th also at 1 p.m. Eastern. And I can give you the links to those to attend. I am certainly going to be registering and trying my best to attend. This is webinar one. And then we have the link for webinar two. And this is called Honest LTC Deep Dive. But they've also provided us ahead of that some materials that I will screen share with you right now. So first we want to look at product summary. And what we have here is essentially just the line by line things to know about this product. 35 to 79, one of the big changes that we see first and foremost is age last birthday instead of age nearest calculation. So that's a pretty major change. And, in certain cases, it's going to um, be very, very helpful for clients who may have been closer to their next birthday in this case. So just kind of helps a little bit timing wise.
I think
Um,
also going down to 35, right, from
yeah,
40.
yep.
That's another, like you said, broader market availability.
Yeah, it's interesting. Like you would think that, the easiest thing to do from expanding availability is actually to decrease the minimum age, but we're also seeing carriers that are looking up at higher maximums as well. So yeah, I think just how do you sell more long-term care? How do you get more folks to understand and protect themselves? Make it available to more people. So that's a trend we've seen in every single carrier we've gone over to this point, which is really nice. Joint policies and premium rates are available for partners who reside in the same household if related policyholders must be of the same generation. So I think that's pretty interesting as well. That's a little deep divey for me, Mark. Was that part of Essential LTC? Insured interest from the same generation
I
for a
think
joint.
so. Yeah, I think that's the same.
Okay. $1,500 to $12,000 in
That's
$300 increments. That's a big change.
yeah, they
Um,
they used to be capped at 9,000 or $300 a day. Now they're going to monthly, but now they've also increased the max there.
I love the change to monthly from daily. I think that's a really big one, another really big client-centric benefit. And that's kind of looking over the theme of what we're seeing. What can we kind of adjust to maybe the preferred option if we can? There is a 10 pay on this plan, which is great to see. There is lifetime premium on this plan. But what you notice is our single pay has gone away from Essential LTC to Honest LTC. So that's one of the things to take note of. It's not just the additions, it's the omissions. What are we not going to see again, right? 90 or 180 calendar days, which is also a great change going from service days to calendar. I think that's also a very client-centric benefit. It is a cumulative and one-time elimination period, and 1 day equals 7 days there. So, yeah, just like to see that change in general. 2 to 6 years, no changes there. Just being able to accommodate alternate plan of care services. I thought that was great. Room and board charges in a nursing facility or assisted living facility are reimbursable under the policy, payable after the requirements. I think that's a pretty nice change as well. They stuck with their premier or nothing underwriting. So pass fail underwriting. That continues to be part of this. There are really no such thing as rated cases with NGL. There's no such thing as a preferred discount. You're in or you're out. Um, Makes things easier from a standpoint of understanding the product from their maybe from their underwriters underwriting the product, but as has kind of been the case for NGL, there's not generally a ton of underwriting wiggle room. Let's see what else we have. Waiver of premium included in the base contract and applicable to 10 pays, which is a great thing to see as well. Um, and I think that is um, some of the major things for just the base policy specs here. 5% association group premium discount, partner discount. 5% is available to individual applicants when the individual has an eligible insured that's not applying for coverage. So one spouse discount. That's pretty cool. Shared care. Uh, I didn't actually read through this one. If either or both insureds exhaust their own policy limit, a joint shared additional policy limit will become accessible, which may be accessed by either or both insured. Um, so in this case, will also increase due to inflation rider only available on joint policies, of course. So it doesn't look like much has changed. There's a third pool still there. 1, 2, 3, 4, or 5% inflation protection is very interesting to me. I'll be kind of interested to see how modifiable this is. I think one of the things I really like about Mutual of Omaha's custom solution is the ability to kind of tailor that 1 to 5% inflation protection with relative simplicity based on the client's needs, financial situation changing, and what have you. Um, Let me see if there was anything else there that I thought was interesting.
Jason, did you
Not
mention that there's the it used to be you had the 10 pay, the premium is guaranteed for 10 years, but now it's limited to 5-year guarantee, even if with the 10 pay.
That's a good piece to note. Thank you for bringing that up. And also, we're going to plan to have the NGL team on to go through a bit of a deep dive. And the webinar is linked in there. They're going to go much, much deeper than we are today. But that's really good to know. Thank you. I appreciate that. And I'm going to make note of that. Um, so let's see. 5-year guarantee on 10 pays.
Yeah, I think Chris is right. There was a regulatory reason, I think, more than a risk reason for that.
Gotcha. Okay. Due to the compact states. Okay, that's helpful. Um, so pretty nice. I like what I see. We've also got the producer guide that you can take a look through. I will add um, both of these attachments into the chat for you guys. Let me go ahead and
Yeah,
do that
yeah. I'll give
right now.
a quick thought on
Well,
that
I
too.
wasn't going to let you go without it. So,
Thanks, Jason. So, I mean, the big deal here is I think that they've kept all their market leading features and they've really responded well to what long-term care specialists like folks in this room have asked for a long time. Monthly benefit, more inflation options. The things they took away, which I think the most notable come to mind are lifetime benefits and single pay. I don't think they were getting a lot of sales on more than they were worried about risk or anything like that. That being said, you might have a window here. If you have a client that's interested, you can go and get them to, fire sale opportunity, get them the current product if it's available before it runs out. I don't know what the cutoff dates are, Jason, with, I know you said the new one's launching on Friday, but they might have a grace period and some of those things.
yeah, that's a good question. Let me just peruse what I have here and see if there was any mention of that. Exchange eligibility starts with applications dated May 1, 2025 or later. In the states that were put in the chat, exchanges are available until April 14th, 2026. No new underwriting required. New product premiums will be based on the insured's age at the time of exchange. None of which really answer your question, but are helpful. Um, ah, Essential LTC applications may be written on paper or fillable PDFs and must be received in the home office by February 27th. Any application in Client Connect that has not been fully submitted will be removed from the system and no longer accessible on February 13th. So the day it releases, if you have pending essential LTC apps in Client Connect that haven't been completed, it's going to get microwaved. You can still fill out a paper app at the end of the day, but I would go in and just snapshot anything you need just in case, so that if you have to switch over to a paper app, you can still do that. And you're going to get 2 weeks from the product release to get those in. For business that's already in, there is a bit of a window that you can exchange. So again, May 1, 2025 or later determines your eligibility to exchange to the new product. And exchanges are available for about 2 months, April 14th. No new underwriting required. That's a big deal, I would say. And then let me get those attachments for you. But Mark, have you heard anything yet on some of the worksite capabilities?
Mm,
Obviously, the specs are really only going to give from the individual product scenario what's available. 5% association discount was about the closest thing that I really saw.
Yeah, I think they're going to be focused on employer groups. I think from what I heard, now some of this is dated information from last year at ILTCI because they were talking about this launch back then. With employer funding, they would give potentially some underwriting concessions. So I think that was the biggest deal in the opportunity. I don't know the group sizes or any of the details on underwriting yet, but I expect that's a part of this product rollout, and they'll probably do a separate announcement about it once they've finished the initial launch here.
Ron, that's a good question that you ask. And I know what I would think logically, that states that have essential LTC approved would stay, but I cannot say that for sure. Has anybody heard
Yeah,
anything different?
I'm pretty confident that you're not going to see any products get pulled. And especially the best signal for that is pricing, right? If they think, the pricing isn't up to par with what the new pricing is, from what I've heard, I think it's going to be relatively consistent with the pricing that we have today. There's not like a huge price increase on this new product. I think there might be a small price increase with some of the feature improvements, they affect pricing a little bit, but I have not heard anything about we're not going to continue selling the old product. And
I
they
think
don't
that
have a
would be
track record of that either.
somewhere. I think that would be somewhere stapled all over the initial announcement. And after combing it, I don't see anything. So
Yeah.
I'm gonna try to attend at least one of the webinars over the next 2 days, and we can report back.
Yep.
Um,
I think you're probably going to see like some changes to like pricing in certain cells, like where they felt one was less expensive than it should have been, or one was more expensive than they wanted it to be. They're going to adjust it, but net is probably going to be a wash, if you will,
I'm
overall.
also interested in how the joint pricing will shake out. I think that's always been a point of contention with NGL, the joint one premium setup, and how the pricing calculations actually work with that. I'm interested to see how that changes. Will it stay the same? Will it make them more competitive, less competitive? We
Mm-hmm.
can really not know for sure, but we're going to be having some answers really, really soon here.
Yeah, I also like Chris said, almost 10 years in from the original product launch, no rate increases. So that's pretty unique that they've managed to keep that price stability so far on the legacy products. No guarantee, but it's nice that
Sure.
we're not hearing that.
And, you know, that was one of the pieces of appeal when the product initially launched way back when that we didn't know how it may prove out is that NGL does not have a legacy block of business that is just kind of sitting there in a closet where they don't want to look at it, right? There's no sort of history of that sort. So, I mean, not having that history can sort of be a double-edged sword, right? There's not necessarily experience to learn from internally. They can obviously borrow from the experiences and data from other carriers out there, whatever they can get their hands on. But no, no sort of certainty for the future. So at least for this first 10 years, um, seeing a clean record is nice. Um, let me see. That's all I had for NGL right now, and of course there's going to be a lot more coming, and we're certainly going to have the team as guests on the study group to go over it. But I'm gonna need a little help from somebody. If you know more than me, I know this is very, very early, but I have also caught wind of big Aetna product changes on their recovery care plan, recovery care choice. And the first thing that I see, and probably the most buzz generating piece I saw, was a maximum limit of $700 a day on the recovery care choice change that is coming today. Uh, the release date was today, apparently. So again, very new, very developing. I heard about this a couple of days ago, and the release date is today. But and I'm hearing $700 a day. I'm hearing existing clients have the ability to add to their plan to reach that $700 maximum daily benefit with an existing client discount associated with that. I'm also hearing that's 15%. Um, Now I'm hearing launch dates of Alabama, Arkansas, Arizona, Colorado, Georgia, Michigan, Missouri, North Carolina, Nebraska, New Hampshire, Nevada, Ohio, Oklahoma, Oregon, South Carolina, South Dakota, Tennessee, Texas, Wisconsin, Wyoming, and West Virginia. And I'll put those in the chat as well.
With short-term care, that's a good percentage of states that have it.
It is because you're automatically limited from the start.
Yeah, isn't competition nice? Manhattan Life was kind of coming in there pretty aggressive and doing well, and I think what Aetna has done is responding to that.
And, folks were initially, there has been no shortage of folks at least voicing concern about Manhattan Life. Can they actually afford to do this? The question is, can we do $700 a day out the gate on a short-term care product? Yes. Good math. $700 a day is $21,000 a month. So this is why this is I'm like having trouble finding my words, to be quite honest, because I haven't
Is
seen
that is
anything
that
like
just for
this.
facility care though? Because I remember that home care had like a weekly amount, not a daily,
For nursing or assisted living facility care during confinement.
Yeah.
So this is just on their recovery care. So they do have their home care plus product still. This is just a recovery care change in this case. All levels of nursing facility care, skilled, intermediate, and custodial.
Didn't they have like
Um,
a separate like benefit though, like a 1 year for facility and a 1 year for home care? Am I remembering that wrong?
I believe there is a rider, home care indemnity benefit rider.
Got it. Okay,
Maximum benefit is up to $2,100 per week.
per week. So they up that as well. I think it was like I don't remember exactly 1,500 maybe a week, and now it's
And it
2,100.
looked to me like there was an informal care, like 25%. Uh, Family and friends can receive 25% of the weekly home care benefit if they provide the services.
This makes no
Um,
sense. Somehow this is wrong. $700 a day, 21,000 a month, $252,000 a year. That's 38 months. That's three over 3 years of assisted living.
I would
Merry
say on its
Christmas.
face it doesn't make sense, but I also haven't looked at the pricing for benefit levels that high.
No, we
So,
heard, Roman, that's what they were planning to do. They were going to increase that benefit. So this is, I think it's accurate. And we do see some other products, right, in the long-term care, like Nationwide has 30,000 a month maximum. It's not unheard of.
but I do have a brochure here. Yeah, go ahead, Diane.
I think I read that I was questioning that same thing, Romeo. How can it be that much? Because the restoration of benefits is not just one time, so it's more like the Manhattan Life, where it can restore itself over and over again, and then that's the maximum that it will ever restore
Hmm.
over however many number of years. But you have to follow all the rules.
So maybe less until you restore it. Is that what you're saying? And then you can get up to 700.
Yeah, well, because if you use it for 6 months and then get better, and then wait 6 months and then use it for 6 months and get better and wait 6 months, so the total amount will be that's the maximum. Just like Manhattan Life says, the maximum is double what you started with.
Yeah,
But you have to
that
have
that's
all
what we
those.
have here. Lifetime maximum
Okay.
equal to twice the number of covered days.
So there's a cap, Romeo, from a lifetime perspective.
Yes.
But I agree, it's a heck of a lot of benefit to, you know, throw out there. 0, 20, or 100-day elimination period. Thank you, Diane, for that. And also thank you, Romeo, for your thoughts. I mean, there's many thinking the same exact thing. And just because there's an explanation doesn't mean we're not still, at the end of the day, um, wanting more information about their comfort level and where that comfort level is derived from, right? That's going to teach us a lot more. And again, a high benefit, a benefit this high is going to make you skeptical in general, but we haven't looked at the pricing for $700 a day either. Just released today. I'm sure there's going to be plenty of folks tearing apart the quoting system just to get an idea of what we come in. You can find me at their booth at ILTCI in March.
Very
I'm
good.
sure their booth will be pretty busy.
Well, I thought you said the same thing about Manhattan Life too, Romeo. Which one are you going to spend time at? That's
Both.
your call.
The Manhattan Life. I've been digging into this, talking to some home care agencies. If you can buy their home care select, and all the two questions are can you do your ADLs? Are you in a facility right now? Well, that's a lot of borderline people can buy that. Now, the $200 a day for nurse, I mean, that's all covered by Medicare, so forget that's bullshit. But the $120 a day for 60 days, that's $7,200 a month. So a 70-year-old woman pays $800 a year. In the next year, she collects $7,200 and cancels the policy. How could they do that?
You need to be one of their actuaries, Romeo.
Or at
$600
least,
back a year for prescriptions too.
yeah, so there were a couple of interesting ancillary benefits added to this plan or optional. I believe they are termed as optional here. Well, actually, under core benefits, uh, $10 per generic prescription, 25 per brand name, $300 annual maximum. Let me see here. There's bed reservation benefit and a Medicare Part B excess charge, which pays the difference between the Medicare allowed amount and the actual amount charged by your provider. Thought that was also very interesting. Um, Issue age is 40 to 89. Anything else that I did not go over just yet? Uh, And then there are plenty of riders for adult daycare. I'm also seeing inflation on this plan, 3 or 5% on policy anniversary date. I'm seeing an optional rider for a $2,500 lifetime maximum for home modification. I'm seeing an optional mental health rider, which pays for costs of in-office or telehealth visits with licensed mental health professionals. I'm seeing an optional outpatient rehab benefit. I'm seeing pet boarding. Um, I mean, this is like anything and everything as long as it's optional. Again, that home care rider, ambulance transportation, daily hospital confinement. I mean, there are all sorts of riders. It is going to take me quite a bit of time to fully grasp all of this, but we're going to have to do it together as a community, I think. Hey, Joe, I saw you pop on camera. Do you have anything you wanted to add?
No, I've sold a lot of Manhattan Life and Guaranteed Trust Life and stacked them. I've had several people who couldn't qualify for anything else, but
Mm-hmm.
get an OmniFlex, a Recover Cash, Home Health Care Select, and GTL, a long-term care, short-term home health care. Buy all four policies and get $1,500. I'm sorry, $1,800 back a year in prescription rebates to offset the premiums. Not a bad way to, get yourself pretty well covered if you've got no other options. I don't know
Yeah,
if
there's a lot of
anybody else has done
interesting
that.
fits. Yeah.
Yeah. And
Um,
and they don't talk to each other. So you can file claim back to back simultaneously. It's what makes most sense for them at the time.
yeah, I think just even stacking with other coverages as well is a really helpful thing. Yeah, I really don't I don't know what to say today. That doesn't mean I won't have more well formulated opinions on this, but yeah, competition is the key word for sure. And all of the bundling is crazy. There were so many benefits that were listed in those optional riders, and at the end of the day, these are health insurance carriers. Many of these short-term care carriers right now also carry health insurance. They also do Medicare supplement business. So there are definitely plays there to offer complements in their overall portfolio, which is just an observation we've been seeing more and more of with Manhattan Life and prescription drug benefits, with Wellaby giving discounts to their existing Medicare supplement policyholders. So, guys, I'm gassed. It's the top of the hour, and I didn't even have time to really wrap it. I mean, there was a ton here, and just know that for those we haven't had a carrier rep on to really go through and ask these questions of and find out more about the plans with, we're going to get them on as soon as we can. Thank you for being here and just listening, offering your insights, and even outright confusion in some cases. And that's okay. We'll get to a place where we figure it out, and we'll continue to do it together. Thank you all. Appreciate it.
Lawrence from Equitrust would love to come on if you've never
Yeah,
had him.
we had Tommy, his wholesaler, on, and we're gonna be speaking with Lawrence on a different call in a week or so. But I can definitely talk to him to talk about the wellness program and Assured Allies in general.
Yeah, thanks, Joe. I
Thank you.
appreciate that. Yeah,
Appreciate
You bet.
everyone. Be well.
take care.
Take care.